Welcome to Intangible Assets with Ryan
Mervin.
and Satish.
Before you start, you should print off the worksheet.
Alright, let's get started. Intangible assets are rights, privileges, and competitive advantages that result from the ownership of these long-lived assets. What that means is intangible assets are assets that can't be touched or seen, thus the name intangible. Ways to get intangible assets are through government grants, an example would be a patent, to purchases of businesses' favorable goodwill from another business, private monopolistic arrangements arising from contractual agreements, an example would be a franchisee or license.
Now let's take a look at the accounting for intangible assets. Accounting for intangible assets is the same for tangible assets, except when amortizing. Intangible assets cost is recorded. This includes legal fees and similar charges. When an intangible asset has no legal determined life and its useful life appears to be indefinite, the asset cannot be amortized. For example, trademarks. To dispose intangible assets, the net book asset is estimated, and gain or loss is recorded, like regular assets.
Now that we know what intangible assets are, let's discuss some intangible assets that are amortized. The first would be patents, an exclusive right to manufacture, sell, or otherwise control an invention for 20 years from date of application. A copyright would be a grant that gives owner an exclusive right to reproduce and sell an artistic or published work for 50 years. Franchisees and license is a contractual agreement between a franchisor and a franchisee to operate it. Right, sometimes. Don't worry about that though, because Ryan will go more in depth about it later on. And other intangible assets would include sports, contracts, startup costs, and customer lists. You should know a little bit about each of these because it may come up on a test.
Okay, now let's talk about intangible assets that are not amortized. Trademarks and trade names. A word, phrase, jingle, or symbol that identifies a company or a product. For example, how Nike has "Just Do It." Goodwill is value of favorable attributes that relate to business enterprise. For example, exceptional management, good customer relations, and skilled employees. Research and development costs. This is not an intangible asset, but it directly relates because they lead to making patents and copyrights.
Let's summarize all the intangible assets. This is a good chart to have in your notes because it tells you which intangible assets are amortized and which ones aren't. So as a review, patents have a legal life of 20 years, copyrights has 50 years, and franchisees and other intangible assets both go by contract term, which will be specified in the question. Therefore, trademarks and goodwill are not amortized. As you can see in the chart, franchisees is there twice because sometimes it is amortized and sometimes it's not. That is a tricky one. You must look at the question and see if a license or franchise has a time period. If it does, then it is amortized. If not, then do not amortize it. Now looking at the bottom, there is research and development. It is there to remind you it is an expense and has to be recorded when that expense happens, just as a usual expense. Let's look at how to amortize one asset in detail. So amortizing tangible assets, you use the straight line method. Unlike capital assets, not have a accumulated amortization account. Intangible assets, when amortized, are directly credited. You credit the asset you amortize. The journal entry would be you debit amortization expense and credit copyrights if you are amortizing copyrights. For intangible assets are measured from either their useful life or legal life. Whichever one's shorter is the one you use for the period that has to be divided by.
Alright, let's look at an example in depth now. The example is, Mervin and Satish Company bought a patent at a cost of $80,000 on December 31st. Its legal life lasts 20 years, but its useful life is 21 years. Find the annual amortization expense and the journal entry. Now stop, wait, pause the video, and make sure to try it for yourself so you guys have an idea on what you're doing. Satish will go in depth on the answer.
As you saw in the question, cost equals $80,000 and its useful life equals 20 years. You would choose 20 years because it is the shortest stated time frame in the question. Now you need to divide 80,000 by 20 and you get the annual amortization expense, which is $4,000. Now that we have that, let's look at the journal entry. You would debit amortization expense for $4,000 and credit patents for $4,000.
By now you should know what are intangible assets, types of intangible assets, how to amortize intangible assets, and which intangible assets need to be amortized, which ones don't. So have a good night, and we'll see you tomorrow.